Welcome to the daily insights that matter. After a few dramatic IPO seasons in the past few years, companies are now planning to reconsider the timing of their debut. Indian ethnic wear retailer Fabindia Limited has withdrawn its IPO amid market uncertainty. Let's discuss this. The markets have been on a wild ride in the last few months, with inflation being a concern and central banks around the world raising interest rates to tackle this. The secondary markets have been consolidating, and this effect can be felt in the primary markets as well. As you can see in the chart, during the bull run of 2020 to 2022, there were a record number of issues as well as the amounts mobilized through public issues. There was a record high of almost 130 crores mobilized through public issues in the year 21-22. Currently, a number of companies have pulled out of their IPOs citing market conditions. Ethnic wear Fabindia, South Indian jeweler Joy Alucas, e-commerce firm Snapdeal, hospitality chain Oyo, to name a few, have delayed their IPOs. Additionally, companies that came out with IPOs in the last quarter failed to sail through, getting very less participation due to the sentiment in the market. Another fun fact, the months of January and February 2023 have not seen a single IPO. The last month of the fiscal year, which is March, expects to see 9 companies raising over 17,000 crore. Let's see how they fare amid this market volatility. The primary market is still very much in a dry state due to the current global economic conditions. With inflation soaring and central banks hiking interest rates, several companies have opted to withdraw their IPO in recent months as valuation expectations failed to match investor perceptions. Despite this, there are a few companies that still feel confident and are expected to come out with IPOs in the month of March. India's GDP growth expanded 13.5% in the period April to June and then moderated to 6.3% in the period July to September. And now for the October-December quarter, it's expected to slow down. Let's discuss this in detail. India's economic growth for the December quarter is anticipated to be lower than 5% on a normalizing base. In a recent survey conducted by the Reserve Bank of India, 41 professional forecasters estimated the median GDP growth for quarter 3 to be at 4.6%, with a broad range of 4% to 6.9%. This is in line with the RBI's prediction of a 4.4% GDP growth for the December quarter. This estimation is on the back of various challenges arising from prolonged geopolitical tensions, global slowdown, and tightening global financial conditionings. The other factors that can be attributed to this expectation are declining in demand and GDP that is set to lose momentum as a consequence of a series of rising interest rates, which is weighing heavily on economic activity. These forecasts have come in at a time when numerous high-frequency indicators have signaled a sequential improvement in performance, especially in agriculture and key services sector. A host of banks, agencies and multilateral institutions have already cut India's GDP forecast for fiscal year 23. But India is still anticipated to grow at 6 to 7%, even if most of them have reduced their growth prediction for fiscal year 23 by a few percentage points. India will continue to have the fastest growth rate in the years to come. This should be our main takeaway as long-term investors. Do remember that revisions from global and domestic agencies will take place because of macroeconomic conditions we are witnessing right now. However, this does not change the narrative that India's economy revival is on track. While we won't go unscathed due to global challenges, we do believe these are just short-term headwinds that will have a minor impact on the long-term growth story of India. So what does all of these news mean for you? Due to the market volatility and an uncertain market outlook, few companies are forced to defer their IPO plans. But going ahead, once the economic activity stabilizes, the IPO market is expected to pick up. This will have an indirect neutral impact on you. We expect domestic growth to remain stable, but a larger than expected ripple effect from weak global conditions may have some implications on India's economic growth in the near term. This will have an indirect neutral impact on you. While I say this is me, Rahil Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor to watch more such informative and interesting videos.